Okay, yeah, Fixing Healthcare H1, that's half year 2026 results. You can see from the headline that revenue, that's profit grew by over 28%, 28.2% year on year. Then, of course, you can see that that's the headline. A closer look at the financial statement. However, naturally, we reveal a lot of things, and that is what we are here to do, because every other person will tell you what the revenue looks like, but nobody will tell you the detail. So the most important thing is the devils in the details, and of course there are so many devils in this detail. So you can always remember to follow us on X, @double_invest, so that you can download these graphics. This is the chart, price chart. This is income statement analyzed by us, not just what the company put out there. We get the raw data, analyze it. This is the balance sheet, then this is the cash flow. Then this is what happened, what we found out, the evidence, and then what to watch going forward. So let's get into it. Okay. So we start with the price charts. Let's see what price was doing at the time of recording. Okay, so this is the price chart as at the time of recording. This is the weekly chart. You can see where price started almost low within 1 naira and stuff like that. Then it grew or exploded close to 135 before it now retraced back. So currently, as at the time of recording, price is sitting at 91 naira. There was a retracement. So this is what the price chart looks like. So like we always say, with this, you can have an idea, matching it to evaluation, know when to enter. These things are other levels. This is where show you the others in the market. Somebody who has bought at this high simply because he's saying he's buying a great business, of course. But it could have been better off not buying at these highs if you match it up with the valuation. That is why we put out those analysis, so you know that it's not every time. Sometimes you keep cash in your portfolio and deploy it at the right time when the valuation is on your side. So let's go to the income statements. Now for the income statement, let's blow it up and start looking at the devils in those detail. Of course, you see that revenue, and you can see that revenue grew to over 74 point something 74.4 or 5 billion. Then cost of sales naturally grew too. But look at where we want to get into it. You see this net FS difference. Code it. We're coming back to it. Then you see the operating profits also pay. Then you see profits. You see profit after tax grew too, but there was a dilution. So the EPS, which is earnings per share, this is when you divide these earnings with the total outstanding share. It's dropped. It's supposed to increase since revenue increased, but why? Because they did more right issue, so they diluted the shareholder. What it means, you offered more share in the market. So their current total share in the market now is over 3 billion. Before it was around 2.5 billion. So that is what led to the lesser earnings. Then we dive more. Then this is the margins. The margins look pretty okay compared to last year. Only this operating margin dropped slightly compared to previous quarter due to these gains. OPEX, that's operating expenses, was on the high side. The operating expenses was on the high side as compared to the percentage revenue. So that is what led to this operating margin dropping. So we are calling on them to improve. They should be more efficient in both the administrative cost, the distribution cost. It's into the profit. That is why you saw the operating revenue dropping. So these are the things you don't see on the headline. That's why we call here the bottom, the middle line and the bottom line. So the up line is what the company always flash: newspaper, television. They say they grow revenue, but when you dive into the numbers, you now start twisting it and piecing it together, and that is what we are doing here for you. So let's now look at the balance sheet before we now give you the thesis behind the numbers. So if you look at the balance sheet, of course, you look at the asset grid, which is pretty impressive. Then you look at the equity side of things too. You can see that the equity grew too, which is very much impressive. Both the returns, earnings and stuff like that. So the balance sheet look pretty okay. Then you look at the liquidity side of things. It is pretty liquid, even though the quick ratio is somehow not there yet, but very close, and every other thing. Then return on equity compared to last year and this thing, of course, because there was more dilution. So that is why you are seeing it like this. Then finally, before we now give you, then the end free cash flow. This is the free cash flow. So free cash flow also grew, which is, as at the previous year, free cash flow was sitting around 8.8 billion, but now it grew to 19.7 billion. So which is pretty much impressive. So, but here the devil's in the details. Number one is that the revenue, if you look at the bulk of this revenue, sorry, geez. Hold on. Okay, if you look at the bulk of this revenue you are seeing here, so the operation is mixed. So this revenue you are seeing here is a mixed up. Hold on a sec. So the revenue is a mixed up. Both FX contributed. So where FX contributed, as of last year, they had negative FX. So this time around, the Naira strength flipped it to slightly positive to just 200 and something million, as against the negative of 2 billion last year. So that swing is a positive. So hold that one. So that is what added to the revenue, and it is the biggest single non-operational driver. Another thing is that the government grant, of course, government support pharmaceuticals and like that. The government grant and monetization income is now shrinking. It shrank from over 351 million to now 228 million. Why? Because CBN is tapering down on all those intervention loan. This CBN we have now is not the it's not Emefiele CBN. So this one, hold on, this one is tapering down. Then another one is the business play, of course, is almost like 97.6% revenue of the business is coming from Nigeria. So it's a Nigerian, like their customer, their sales is coming from Nigeria. Even last year it was a bit higher, set it was sitting at 99.7. So this year, because export increased, so that is why we saw that difference. Export now increased in percentage terms over 949% in percentage terms, but in Naira terms is small. It just moved from 173 million to 1.82 billion. So if you compare it to the total revenue, it's just small. But it's just worthy to note that export is coming there. Then for the segment side of the business, of course, the largest franchise of their business is their ethical arm. They have OTC side of the business, which is over the counter. But this ethical arm also, when you compare with the OTC had the highest growth in percentage, while the OTC segment had the highest growth, 45.7%. We explain these things here too. So you just note that. Then of all the sales, the receivables, trade receivables are widening too. As another thing, it's not just to make sales. Another thing is to collect your money, because if you don't, that is a potential risk in the future. Then the dilution is another thing that hits the book. You offered more shares, you diluted the new shareholders, and you are also proposing, not just proposing, it's even live for the employees also, a share compensation scheme also is being rolled out. That is also another leg to the dilution story. Then this dilution also led to the free float. Businesses, there's a requirement for you to float your shares. So before these dilutions, their free float percentage was sitting around 36. They were floating around 36.7% of their shares. But after this issuance, so the post right issue now is sitting around, it narrowed, the free float narrowed to now 34.72. So it's worthy to also note that. Then, of course, they proposed a dividend of 1 naira 50 kobo. Then, in total amount, they will pay out 3.6 billion in dividend, which is they have enough lever to cover it because their operating cash flow is over 28 billion, so they can cover that. Then another thing to note finally is that the debts too, their debts, they refinance their debt and retired the CP they offered. CP means commercial paper, so they retired that CP and replaced it with a new facility from Cardinal Stone. So the CP was around 19.6 billion. It has been retired and replaced with a new facility they collected from Cardinal Stone, sitting around 11.2 billion. So that is it about Fidson. Read, you can see the thesis, the good side, the bad side, the neutral side. So you pitch it together and read more here. The things we are mentioning, some of them are not here. So you read it up and make your decision. Always remember you can reach out to the team. Watch out for other analysis. Like we break it down like never before. Till then, peace.